Important Market Voice. Nischal Maheshwari, CEO at Centrum Broking, joins us right now on the show. Nischal, good having you. Thanks much for taking the time out. We were talking about crude and the potential benefits that it brings for specific sectors. But would you reckon that the risk off mode that the market at large seems to be in, that crude prices coming off, is that big positive support for the Indian market sentiment currently?
I think so. Basically, that's very well defined. India is a large crude importer, and if the prices goes down, obviously India benefits out of that. You know, how long, given that crude is a bit, it is quite volatile, this benefits are sustainable or not is the question basically.
Let me rephrase my question, Nischal. What I meant to ask was that will crude provide that support at a point of time when everything seems to be in a bit of a risk-off mode? I mean, US, the yields are where they are, indicating towards some recessionary moves. Gold is trading close to 3-year highs. We've seen yesterday that despite a fairly accommodative policy, markets pulled back as well, concerns on valuations thereof. Will crude do the trick, or would you believe that there will be a bit of a pullback?
I don't. So it's very difficult to predict crude basically. If it was totally demand and supply, one could have actually predicted crude. But there is too much geopolitical situations involved in crude, and it's more of a political commodity rather than actually just a pure commodity. If you would have asked me something about steel or aluminium, I would have been able to tell you with more certainty. But about crude, you can't do anything about. So I think it's just going to keep on being volatile. But according to us, I think a broad spectrum of $50 to $70 is where we think that crude would be in the next couple of quarters.
So some of these crude beneficiary sectors, do you think this near-term catalyst could work well for them?
They should be basically, but I don't think so. So one has to be very clear basically that are we buying only for just the near-term benefits, because suddenly these benefits, if the crude hits 70, basically these benefits are going to get wiped out. So these are not sustainable things basically. I don't think so one should start investing something on a basis of crude.
All right. So Nischal, let's talk about the market in general now. We've got to the RBI policy also out of the way. First off, what was your sense on what the RBI governor did? Much anticipated 25 basis point rate cut. He also spoke about transmission picking up in a bigger way at a much faster pace now that there is more liquidity in the system and we are cash surplus for the month of June. So does that augur well for the entire working system right now, from the financials to the NBFCs?
I agree basically. I think let's see how this cash basically, which is there in the system, which has come after a bit of time, how this cash gets transmitted. Yes, the liquidity is there basically. Well, is it getting given to, or is it getting utilized basically, or is it getting borrowed by the NBFC sector or not? Because that's a sector basically which has been asking for cash, and it's because for whatever reason we are not getting it. So that is a question mark basically. We have to see how this transmission, which RBI governor thinks has happened basically, or is going to happen. That's a big challenge basically which the whole industry is facing. So overall policy seems to be okay basically, but I was a bit disappointed because there was no clear framework saying that how we want to manage liquidity. And I think this market is not about lower interest rates. This market is more about liquidity at the moment. Or everybody seems to be trying to find out where the liquidity is. Yes, we have seen for the first time June having positive overnight liquid balances. Let's see how sustainable is this basically, and how it gets transmitted to the NBFC sector.
Sure, but they've taken the initial step of creating an internal working group to tackle the liquidity issues and have the toolkit liquidity management toolkit, and the update of that as well. But that will, probably take its own course. But aside from that, Nischal, we've come to the close of quarter 4. We have how the entire year shaped up for the Indian equities and for the earnings performances. What was the highlight for you from quarter 4?
So I think Q4 has been more or less as expected. There were not many surprises except for the auto sector. I think auto people expected to do better basically, but the numbers were much worse off except for Bajaj Auto. I think everybody else disappointed on the lower side. Banks were okay basically, that was where market was expecting them to be. The other sector basically was FMCG, where I think more or less close to expectation, and cement surprised everybody. So I think this is where I see some of the highlights. Otherwise, we found that more or less it's been sort of a benign kind of an outlook.
Nischal, just one follow-up though to the question answers that you gave. Is it time for the markets to start looking at the NBFCs from a prism of there not being any necessary immediate support coming in from the Reserve Bank or the powers to be? Because every time the market prices in something and then there's disappointment. It's happened now 3 or 4 times, either from the RBI side. Best to not bake in some support when you're looking at the stocks and the businesses?
So I think basically one shouldn't try and bake in any support and then try and look at saying that which are the NBFCs which can still survive without the support of RBI. So I think there are 2 or 3 categories. So these are the Bajaj twins are there basically, which are HDFC and Bajaj twins. I think those are the real AAA category. Then you have the asset-backed NBFCs. I think those are the NBFCs basically which I would want to be investing in, because there is solid base and they are still not impacted by any of the real estate or any of these problems on the asset side. So, and they are fairly granular that way basically as far as assets are concerned. So it makes sense basically to look at it, and they have also corrected along with all the NBFCs. So I'm talking about the Centrum and Cholamandalam finances of this world basically. I think those are the sectors basically which I would want to look at in case of NBFCs. Remaining, I would want to wait and see how the whole thing pans out, because most of the NBFCs are kind of a me too, and you do not have very differentiating thought process in most of the NBFCs. And again, the one sector which everybody has been pursuing is the mortgages. That's where I think most of the problem lies.
Nischal, just one final question really. Would you believe that there could be some bit of a problem that could come in for this space because of the concentration in real estate? Because that space seems to be now on the brink of some bit of surprises coming in. The good ones could do well, but the problematic ones could create a problem not just for themselves but for the system at large.
I think that's been the theme out there basically for the last 2 or 3 quarters. I think most of these NBFCs has been punished because their exposures to real estate, and I do not see much light at the end of the tunnel as yet for the real estate. If you really look at it, real estate has been pretty slow except for in south. So whether it is north or west, I think rates have been down, still the sales have not been picked up. So I think that is the challenge basically which most of these NBFCs are going to face who have got large real estate exposures. So that theme just continues to be there, and I think another couple of quarters you will not find any solution for that.